Okay, we're going to go ahead and get started. Thank you for attending our home buying webinar today presented by Provident Credit Union. Our session today should last for an hour with Q&A at the end of today's session. During the presentation, you'll have the ability to send questions to our webinar staff through the questions pane. Simply type in your question and click send. We'll address all Q&A at the end of today's session, and a copy of the slide deck will be emailed to all attendees in about a week. Our first presenter is Fatemeh Sangabi. Fatemeh, would you like to introduce yourself?
Yes, hi, good afternoon. This is Fatemeh with Provident Credit Union. I've been here over 25 years. I'm a senior mortgage consultant, have been assisting first-time home buyers and also the move-ups, refinancing, all of that. So I hope to be, in for a long haul, a good relationship with everyone. Um, I'll go ahead and pass it on to you, Amanda. Thank you.
And our realtor today is Michael Mendenhall.
Hello, everyone. My name is Mike Mendenhall. I'm a full-time realtor for the last 45 years in the Bay Area, and I'm so fortunate for Provident to have invited me in today to discuss the real estate portion of today's webinar. I'm also very happy that we have Fatemeh Sangabi with us because she is a fantastic loan expert, and she should be your first phone call after this webinar. Thanks.
Um, So Provident Credit Union has been around, since 1950s. We started as a CTA credit unions, which is the teachers credit union, and we have expanded our services to the rest of the, um, communities in the Bay Area as well as the whole California. We are strong in membership and have strong assets. We are a safe, sound credit union. We're a paper lender. And again, we're here to support first-time home buyers and repeat and move up buyers. Um, as mentioned, we are a safe credit unions. We are member base. That means you and I own the credit union, so we'll try to do the best investments, safe investments, and where we all get profits from it. We are one of the top credit unions in the California, and we have been on Forbes multiple times. And again, we're here to provide you service and assist you with any questions that you may have. And we are a full financial institution. Today, I'm here to assist you with the understanding of mortgage financing choices, introduce you slightly to different loan programs, and then when we connect, we can definitely discover exactly what would fit with your scenario. We'll look at your ownership objectives and what you like to achieve. Look at your maximum qualification and where your comfort zone is. We'll look at again, the best pricing, loan terms, and again, see what fits your needs. And then, of course, you're going to be hopefully, communicating with Michael and see where you can make your best offer and proceed with that. Today, we're here to educate and introduce you to the home buying process. Applying for a pre-approval is the first step. If you need to just have a 2-minute conversation, we can do a pre-qualification, make sure, we're going through that process and make sure you're prepared for the down payment. And then I'll invite you to apply for the pre-approval. We'll review what it takes as far as what to expect for the cost of closing your loan transaction. Connect with the professional real estate agent like Mr. Mendenhall, and then start your home search and then find your dream home and, walk you through how to make an offer. When we speak, everybody has a different down payment in their budget. We need to review that, review closing cost, Make sure you're prepared for your reserves. At bare minimum, we require 2 months. Of course, as the loan size goes higher, we expect higher reserves. You need to select a real estate agent after, select your realtor to work with after you have your pre-approval so they can walk you through it. It's very important to work with an agent. Um, they have access to more than what we see on our searches. Again, once you have your pre-approval, they will be asking you for a pre-approval. Right now, all agents will require you to have a pre-approval to know what you qualify for. The pre-approval process is simple. We have a mortgage application link, which is on our website at providencecu.org. You'll complete that. I also have my mortgage application link right on the website. Based on the application, we'll ask you for the supporting documentation. For instance, if you have a regular employment, we'll ask you for 1 full month current pay stub, your 2 years of W-2s, and then for assets, we'll ask you for 2 months of your banking statements. Please don't hold back. Please share your retirement account, stocks. All of those will make the file easier to underwrite. As far as debts, from today on, please do not open any more credits. Do not close any of your credit cards. Wait till we speak. Wait till we go through that application process. You may be able to use that money somewhere else for a closing cost for your reserve. And then if it needs to be applied on paying down, your debt, we'll discuss that. And that can happen at the close of escrow. As I mentioned, please, it's really important. If you're here, you're thinking of purchasing a home, it's good to connect, review your scenario. Buying a car now is going to deplete and take away from your buying power. So it's best that we speak and decide what you want to do. Do not pay off your car loans. We need to run that credit to make sure your credit is within the means of the loan program. If you're changing jobs, please let us know. We don't want to be caught surprised during the process. And also moving money around. We need 2 months of history. That's seasoned money. And if you start moving money, we're going to ask for paper trail. And just to avoid all of this, please do not move, do not consolidate accounts. If you're receiving gifts, please just mention on the application. When it comes time that you're in contract, we'll provide you the gift letter. And then we need to verify that information. So there is a place to list the gifts, and it can be in any amount. It can be the whole down payment. As far as savings, stocks, the same thing as I mentioned. Please do not move money around. If you have to, please make sure you keep paper trail. So if you move money from your savings to your stocks account, make sure the transaction meets the same amount. As far as overseas account, if you're bringing money over, let's discuss that. If you're 2 months out, if you want to get the money over and have it let it season, again, 2 months requirement for seasoning is required. Or we need to do a paper trail. We need to make sure that the money, where it's coming from, and we're able to verify it. We do have a variety of mortgage programs, the traditional fixed mortgage loans, as well as the adjustables. As a first-time home buyer, I want to say your first home is not for your ever home. So probably the adjustable mortgages make sense, and they definitely have a more favorable interest rate, and they do qualify you. They would help you qualify for more. But we understand some people, they like still the traditional fixed terms, and we offer them. And adjustables, again, we have different loan programs. For instance, we have a program that's called 5-5. The interest rate is fixed for the first 5 years, one adjustment on the 5th year anniversary, and it relocks for another 5 years. So again, we're a safe credit union. We're here to look after our members as well as our own interests as well. Once again we speak, we'll determine which loan program is of your comfort zone and what fits your guide, within your budget and all of that. As far as the mortgage rate lock, again, at the pre-approval, we do not lock the rate. You have to be in contract to request a rate lock. And again, each person's scenario is different. We will discuss this, and again, it depends on the loan program as well that you select. What to expect with your mortgage. So usually we ask, what is your purchase price? What is your loan amount? With the loan amount, loan program, generally there are a few expectation. You're going to be paying principal, interest, property tax, and insurance. And if you put less than 20% down, it will require PMI, private mortgage insurance. So these are the stuff that you need to expect each month with the home ownership. This is what goes into that bucket. That's fine. I'll go ahead and turn it over to Mr. Mendenhall. Thank you so much.
Okay, thank you so much, Fatemeh. And again, everyone, Fatemeh should be your first contact before you reach out to any real estate professional, because you'll need to know what your comfort level is for purchase, and she can explain all the programs. What we have in front of us here is an estimate of closing costs for buyers. This is fictitious because in the state of California, we have what's called customary closing costs, and they are customary in that county. So in other words, what might be a buyer's fee in one county could be a seller's fee in the other county. So if anyone would like to know who pays what in the county or counties that you are looking in, just shoot me an email and I'll send you out a little list on who pays what. Okay, we have loan application fee. It looks like Fatemeh paid that because it's zero. Lender fee, flat fee $9.95. That's very low. Thank you, Provident. Loan origination fee, points. Points. 1 point is 1% of your mortgage amount. Now, it could be less than a point, it could be more than a point. And what is this fee for? Usually it's to buy down your interest rate. Sometimes it's a good idea to do it depending on how long you're going to live there. Sometimes it's not a good idea, and Fatemeh can help you determine that. One-time tax service fee, $119. Credit report, $55 per person. Appraisal fee, $700. It could be less than that. It could be more than that, depending on the size and location of the property. Hazard fire insurance for single-family residents is around $1,000 a year, unless you live in the many high risk fire zones that we now have in California. So before I would make an offer for a property that I'm looking at, I would call my insurance carrier and ask them what the hazard insurance would cost for that type of home, that square footage in that particular location. PMI, again, if you're putting down less than 20%, you will have principal, interest, taxes, and insurance as your payment, plus a little PMI monthly fee. And it's very, very low compared to what it used to be years ago. And Fatemeh can explain what that cost would be when she meets with you. Impound accounts, optional. An impound account simply means you have the option of paying principal, interest, taxes, and insurance as they come due, like taxes and insurance, they come due at certain times of the year. Or you can ask Provident to go ahead and allow you to send them one payment a month, principal, interest, taxes, and insurance, and they will handle paying all those costs when they come due accordingly. And there's no charge for that. Personally, I've always done impound accounts. It just makes your life so much easier. CLTA insurance, buyer policy, ALTA title insurance, lender policy. Those two fees are one-time fees, and consider them to be insurance, okay? That you are insuring the title of the property. When you purchase real estate, you go on title to the property, and the title has to be unencumbered, meaning that there's nothing there that needs to be paid off. Or what if something comes along later and suddenly pops up and you go, that's not me, I've got clean title when I purchased this home. You will have this insurance policy to protect you for the future. ALTA, it is the lender's fee, but Buyers usually pay it for the lender. Escrow fee, $1,200 for the title and escrow company to handle the paperwork for the purchase, and that goes by purchase price. So as you go higher in purchase price, becomes a little more expensive. Recording notary fees, that's to have the notary record you, that you are who you say you are, and they will have you notarize their book. Top right, inspections. Now, these are the most common inspections for a single family home. Termite inspection looking at dry rot, wet rot, pest infestation, and plumbing leaks. Roof inspector looks at the condition of the roof, tells us if we need any current repairs, and more importantly, what is the remaining life of the roof. Roofs are very expensive, so life expectancy is important. Property inspection. This is an all-encompassing property inspection. It means they go through the entire property from the top of the chimney to the crawl space or basement under the home if it exists. And they will come back giving you a report, and it's called a visual report because there's no destructive testing. They're not drilling holes and putting cameras in walls, none of that. But they do go through the entire property. If I had all three of those inspections on a property, I could review them with my clients. I could tell them what is eminent or urgent, meaning safety, that needs to be taken care of, what would be a good recommendation for safety but not required, and what are the life expectancy on the big ticket items like furnace, AC, the roof, that sort of thing, because that could come due on your watch. Miscellaneous charges differ in each county. In this particular fictitious city, transfer tax is $1,650 based on a $1 million sales price. County transfer tax, $1,100 based on the 1 million sales price. And you don't always close at the beginning or end of a month. We close, any of the work days throughout a month or a year. So we're going to charge interest for the days of the month remaining when you sign off. In this case, 15 days. Gives us grand total of $12,701 to close this transaction in this fictitious county and city. Now, it could easily be almost double that, depending on where you purchase in the state. Okay? All right, when I work with buyers, the first thing I ask them is how many years do you think or see yourself living in this home? If they said 5, I would write on my little sheet here, 5 years. And then I would start asking questions. I ask a lot of questions, trying to figure out what it is they're looking for. And I will put this into an automated search. But keep in mind that the most important parts of your search are location, type of property, condo, single family, etc. How many bedrooms, how many baths, minimum square footage, minimum garage space, that sort of thing. All the rest of the questions that are on here, they're not all on here. This is just an example. Those are for me as the agent to say, hey, keep your eye out for something that has almost all the things they're looking for. Because if we put all those in as search filters, which I could, you're going to lose a lot of properties because agents are notorious for not filling out the entire listing. Okay, so we would start on the left under bedrooms and we work our way to the right. How many bedrooms do you require for the 5 years? What do you desire? What are you neutral, you don't care about? And what's a negative search? So we would go through all of these questions and many more. But where we usually get hung up with a lot of the discussion is on kitchen. So if you look under appliances and systems, we're going to talk about ovens and range, gas, electric, induction, etc. Refrigerator, how big, how many. That's really important. Then we'll talk about counter space. And even though it's not listed here, would be the discussion. Do you like your kitchen as a galley? Do you want it open to the great room? There's so many things about a kitchen that seem to be important to people. And then we're going to talk about heating and air. Do you have allergies? Because different types of conditioning systems can affect gas, oil, electric. Those are the most common. Are you on city sewer or septic? Many properties, even in the flat areas of the Bay Area, are still on septic systems. So that would be a discussion to have. Washer dryers, really important to condos and townhomes because not all condos and townhomes have their own washer dryer. They may have a coin op. So if you don't want that, we'd ask if the community did not have it, are we allowed to install one? And where would we install it and what would that cost? Okay. All right, second part here, we've got the roof. So if you're in a single family home, you are responsible for the roof. In a condo and townhome situation, that would be the HOA's responsibility. But if you're going to live there 5 years, I would say under requirement for the roof, I want 10 years or more life remaining so I don't have to put on a roof to sell the property. And then it starts to get into aesthetics, type of siding, wood, stucco, stone, fenced yard, how big, what are you going to use it for, frontages and pools. Pools are a big one because when I first got in the business, like I said, 40 plus years ago, pools were an asset. Everybody wanted a pool, but we had not yet started having water shortages, and insurance going up if you have a pool. Nowadays, very few people want pools, which is why I encourage you to always look for houses with pools because most people will turn away from them, but you can make an offer on them. You can get a much better price in most cases than you would get for the same house on the same street without a pool. Everybody wants that one. But I can look at a pool, tell you what it's going to cost to remove it. And this is how much we think we're going to save making an offer for a much better price. And usually it pans out that it's worth buying the house with the pool, even if you don't want it. Neighborhood, architectural style, price range, homeowner association. We would discuss all those with you. Really important. HOAs are very, very important. We'll come back to that. Commuting times, where you work, where do you go to school, where do you shop, where are your relatives? We like to ask that question because we want to put you in an area where you're not having to commute 2 hours if possible. Let's try and get it somewhere in between all those if you go to all those locations on a regular basis. Okay? All right, types of homes. Single family home. Okay, shares no common walls. I need to stop there and say I'm going to have to change this, I think, because there are a lot of single family homes now that they're called attached single family homes. And all that means is it's like a duplex. A duplex is purchased both sides by one person and they own it and they rent or live, whatever the case is, in the home. In an attached single family home, it's like a duplex, but a person purchases one side and then another family purchases the other. Okay. So look carefully at your listings up in the left-hand top corner. It'll say whether it's attached or not. Most are not. Most share no common walls. Generally includes front and rear yards, owner responsible for property maintenance inside and outside. Really, really important. Owner pays all insurance costs. So let's sum it up by saying you are the foreman of the ranch. There's nobody going to take care of anything on that property if you're not in an HOA community. Some single family homes will have the front yards done if they're in an HOA, but most are not in HOAs. And even those that are most ones that are in HOA, they still take care of everything themselves. Okay, townhomes and condos on the right. Shares common walls. I think we all know that. Monthly homeowner association fee. The HOA fee covers exterior grounds and building maintenance. Now, you want to read carefully, and with your realtor will as well, the HOA, who takes care of what. There will be that information within the HOA package. Read it carefully because it may say something you don't agree with, like you're responsible for your deck on the exterior or you're responsible for something that you go, wow, most associations don't make me responsible for that. The HOA generally pays for the master insurance coverage. That means your monthly HOA goes towards maintaining the grounds, everything around the property itself. You're responsible for the inside. So they have the master insurance for the actual structure, but you will pay a month or a yearly fee for what's called walls in insurance. That is kind of like renter policy. So that let's say there was a fire, you would have this insurance to cover the fit and finish on the inside of the property after they've rebuilt it. And lastly, please review the financial health of the HOA. It's really important that you understand that they are financially fit. That can be a real big problem after you purchase and you move in, you find out they don't have enough money to take care of the place. Okay? All right, where do all the properties come to us on the multiple listing? Okay, let's talk about the first one. Foreclosures. Those are just lender-owned properties, require special forms, and I would work with an agent who has experience because these can get a little sticky. There is a myth out there that foreclosures are great deals, that it's just a property for sale. It might be a great deal that day, and it may be the worst deal that day. I just treat them like any other property, but you have to understand all the special forms. Over to the right, probates. That's anything to do with the legal system of the state of California. If the courts are involved, there's so many different levels that they could be involved in a property that you need to have an experienced agent that knows all the different ins and outs of the different types of probates. Corporate transfer, kind of my favorite, and the reason is corporate transfers generally happen September through December. And that's where companies relocate somebody. Usually that's a promotion. Okay. So somebody's been living here in the Bay Area. They bought a 65-year-old home. They've been living there. They're making good money. They're upwardly mobile in their company. So they've got enough money to remodel the kitchens, remodel the bathrooms. They sink a lot of money into it. And then, oops, they get transferred. And if that happens, that's a really usually great opportunity. And it will say in the listing, and your realtor can point out whether or not it is a relocation. Conventional listing, that's just your typical house for sale. We need a smaller house, we need a bigger house. Market forces dictate how often those come up, and they are the most common listing. Okay? All right, here's an example of the email home tour. It's going to come to you in the top right. You're going to have bedrooms, bathrooms, building square footage, lot square footage, usually the age of the property, and we don't believe any of it, okay? We will believe it as far as to go to look at the house, but if you want to make an offer, it's your realtor's job to go ahead and verify all that information, okay? Because there's a lot of times there's information that goes up there that is not correct. So you do want to verify all that. Then you go down to the bottom and you have the public comments. The public comments are those comments that have been approved by the seller to go ahead and put on the internet, put on flyers, put on the multiple listing service. And that information is good. I mean, it tells you a little bit about there. We don't completely believe everything, but there are sometimes some buzzwords that you'll see over and over and over. And we're going to talk about those in the next slide, okay? All right, so we have listing comments. On the left are the ones to be aware of, and the ones on the right are the ones to look for, okay? The cautious ones. All the property needs is a little TLC. I have yet to go to a property where they say all it needs is a little TLC and that's all that it's needed. Usually means much, much more than you ever thought TLC should mean. Great for first-time home buyer or investor. That means it's probably, 60-plus-year-old home in the Bay Area. It hasn't been updated, but it's been taken care of. And first-time home buyer, that might be great for them because they're handy. They're going to get in there and they're going to slowly update the kitchens and baths and just really clean up the property so that when they sell in 5, 10, or 15 years, they're going to have much more equity because the house will sell for more because it's been updated. Now, the investor will do the same thing, except they will have renters move in, and then 10 years from now, they'll boot the renters out, remodel the whole house, and sell it. Contractor special, fixer upper, those are usually all cash requirements. And the reason they're usually all cash requirements because the property is in such poor shape, it does not pass health and safety certification. So that means most lenders will not loan on it, which means if you have cash, that's great because those will require all cash, but you'll get it for a lot less. And then if you have the resources to update it at the time, you're going to have a heck of a house and you got it the way you want. On the right, if you're looking for something you just want to move into, look for these words: recently remodeled, new, renovated, move-in condition. Those generally are going to be in really good shape. Okay? Okay, now you're ready to buy. That means you've been looking at property. Now, that automated search has been coming to you, let's say, for 2 months, and you've been going out and looking at properties. What always happens with the automated search is we talk about it and we start to, go ahead and change things as you like. So in other words, you might say, we're not finding anything with a den. So let's just take the den out and let's just look for bigger living rooms. You can change all sorts of things in there. It's a learning tool. So you've got to the point where you know where you want to buy geographically, what type of home. You've got all those bugs worked out. So the ones that are coming to you now should meet all your needs. Look at homes 24 hours a day, 7 days a week once you have it figured out because houses sell 7 days a week and they do many times sell within 48 hours. So you want to get out there to look at it as soon as possible. More people are staying in their properties now when they sell, so you actually have an opportunity to meet the sellers. Try to meet the owners of the homes you view. That's a great asset for you because you introduce yourself, you give them your name, and then when the offers come in, they go, "Oh, yeah, we remember them." And people like to sell to people they've met. Okay? Look in, under, and over when viewing a home. Yes, you have inspections, but you know what? It's your responsibility to really take your time and view the property. Remove the shoes before entering a home. You're going to find that since COVID, 99% of the homes have a remove shoe requirement. If that is the case, there'll be booties there. I don't like the booties. They become disgusting after one open house. So what I would do is I would use slip-on shoes, things you can take off real fast and put back on when you walk out the door. Do not bring a crowd when viewing, okay? Just you and your agent. Now, if mom, dad, or relative are gifting you money and they want to come along, absolutely, they're potentially a buyer. So that's great. But family, friends, and coworkers that are not involved, show them on another visit, okay? Okay, when you're walking through the property, try not to make any negative comments about the home you're viewing or any comments like questions like, Mike, how much would it cost to blow out the wall between the kitchen and the living room? Sellers on almost every property now have cameras. They hear everything that's said. So if you like a property, but you want to know what it's going to cost to do this or that, have that discussion outside. People don't like to hear about things being torn down in their kitchen that maybe they remodeled for the sale of the home. Don't bring a crowd to viewing a home. Again, don't use the bathroom in any home you are viewing, especially vacant homes. People think, oh, I don't need to worry. This is a vacant house. I can use the restroom. Many times the water's shut off. So you know what? Stop at a Starbucks or somewhere else. Okay. Okay, second look. When people tell me, hey, we really like this property, we'd like to get the disclosures, we're considering it, I say, hey, we're here at the property. I know we just went through it, but let's walk back through again. Let's open and close, turn on and off, actually go into the hall bathroom, go into the master bathroom, see how big they feel when the door's shut. Really take your time because when you're going to make an offer, it's really important that you're committed to that property. Okay? Comparative market analysis. So the CMA, this is something we do on every house that you have interest in. It's a market analysis that show us sold properties going back 90 to 100 days using data from same geographic area, same schools, beds, baths, square footage as close as possible. Okay. It looks like there's only one active property in this example, and that's Shoreview at the very top. Down at the bottom are all the ones that have sold. Well, Shoreview is a 3-1 and it's 1,000 square feet. And if you see the ones down below, they are all 3-1s and 1,000 to one of them's 1,040. So I would question that 40 square foot. Is it an addition? Did the seller measure and they disagree with what somebody else says? But I would want to investigate that. Now, behind this is going to be all the photos from the sold properties. You're going to see the kitchens, you're going to see the baths, you're going to see the yards. There's also maps showing you where in the city it's located as compared to Shoreview. So that will tell us the high sale, the low sale, all the sales in between. We'll see the photos. We'll see if it's on a busy street or a quiet street. And we can find what properties that sold are most closely resembling Shoreview. That is a real good indicator of where the property will sell price-wise, and we shouldn't have any appraisal issues. Okay? California purchase agreement. Okay, there's two that we use locally around Northern California, CAR and PRDS. They're both good contracts, but I'm just prepping you for that. And if anybody would like a sample purchase agreement, shoot me an email. I'll send one out to you. The best time to review a purchase agreement is when you do not have a property. You're just looking at the agreement for the agreement itself. You want to make sure it has the most recent revision date at the bottom right. Broker review. If you're using a newer agent and you'd like someone to be looking over their shoulder, ask them to have the managing or training broker in the office initial the bottom right-hand corner of the purchase agreement on the front. It will say, we've reviewed this and we're okay with it. Then you're going to talk about contingencies. Do you want an inspection contingency? Do you want a financing contingency? How about an appraisal contingency? There's so many things that could be contingencies that's a discussion to have on each and every offer you make. Okay? Okay, the offer process. You found the house. Yay. You and your realtor decide what to offer based on the market analysis. You can have a big discussion about that. Discuss possible contingencies in the offer. Your realtor will present the offer. Seller will respond by accepting the offer, rejecting the offer, or making a counter proposal to your offer. You can accept, reject, or counter the seller's response. That goes pretty quick. Generally, you'll get an answer unless the seller's out of the area. You'll probably have an answer the very day that you have the offer submitted. Okay? Right real estate agent. How do we find them? Well, ask family, friends, who they've used, and questions I would ask if I was looking for a real estate agent. And I do, because I bought properties in other states, other areas of California, and I don't know those areas. I don't know if the laws are a little different or the way they practice is different. So I would ask them, hey, how long you been doing this? What are the number of transactions in a previous year? Are you a part-time realtor is what I'm really asking, or are you out there really working in today's market? How many were buyers and how many were sellers in the previous year? Lastly, you want to ask them, you say, you're a first-time home buyer. If that's the case, you say, do you have enough time to work with a first-time home buyer? Because first-time home buyers require a lot of hand-holding and a lot of time. A very experienced agent will tell you if they do not have the time for that right now. Okay? During your meeting, establish goals, determine a strategy, develop a timeline. Usually the timeline is let's talk once a week about adjusting your search filters. And you'll find that you might go from 7 cities you're looking in. By the time you're ready to make an offer, you're down to 1 or 2 cities at most. Okay? All right, your offer was accepted. What happens now? Well, the average escrow is about 30 days long. It can be faster, it can be down closer to 20, or it could be longer because the seller needs that longer close for whatever reason. During that timeline, you're going to have everybody on your team, the agent, the lender, your insurance person, inspection people, repair people, the title company are all asking you to review and sign, review and sign. And we will be very, very wary of having you sign anything unless we have reviewed it and we can clearly explain it to you. Where are you? You're at the top. You are the CEO. And like any good CEO, you have no clue what's going on. So you're looking at all the people below you that are actually doing the work and do know what's going on. And you're the one that finally makes the decision, go forward or not. Okay? And this is what an escrow task list, even though you probably can't read it, it's pretty small. It's just what I see when I get up in the morning. I say, okay, what's due today that has to be turned in, signed, whatever. And I go after that, what's due in 1 day, what's due in 2, 3, 4, etc. So I'm always keeping things moving. And I'm sure everybody involved in this transaction that I just talked about on the last slide, they're all doing the same thing. We all have the same goal to move this forward correctly. Okay? Until you get to the moving day. Well, we just talked about the nuts and bolts of a real estate transaction. If you are a first-time home buyer and didn't know how everything worked, hopefully you have a little bit better understanding. If anybody would like a referral to a real estate agent that's experienced anywhere in the United States, I have a service. I pay for everybody's background information if they have a real estate license. So I can look up people that are working currently and they're very experienced looking for help you look for the type of property you're looking for, et cetera, in those geographic locations. Okay, if anybody wants to talk to me about the Bay Area, I'm happy to chat with you. Fatemeh.
I am here. Uh, I as well, I am available. All of our contact information should get posted. So this is my direct line, 650-508-7269. My line is open. I'm here pretty much the whole week. You have my email. And again, as I mentioned, the first step is to get your pre-approval so you know where is your comfort zone, where is your qualification, and any real estate agent that you're planning to work with will request for this pre-approval. And again, this is the time to uncover what to expect, what's your comfort zone, review all of that information. And again, I'm available please just reach out and we'll take care of you.
Okay, if anybody has any questions, you can use the little thing on the screen there to submit your question. And if you don't have a question now, but you have some question or questions that you would like to follow up with either one of us, that is our contact information. Reach out to us. And, I'm constantly answering questions for people, and happy to do so in the future.
Doesn't look like there's any questions. Thank you everyone for joining us today. Like Michael said, you can reach out to Fatemeh or him at any time if you do think of any questions. And again, a copy of today's slide deck and a recording of today's webinar will be sent to everyone in about a week. Thank you for joining us today.
Thank you, everybody.
Thank you
Have
very
a
much.
great weekend.
Have a great weekend. Bye.